It's a real pleasure to have our keynote speaker this morning. I'm just going to introduce Michael before he steps up. Michael Liebreich will be well known to many. He's the Chairman and Chief Executive Officer of Liebreich Associates, but he's maybe best known as founder and senior contributor to Bloomberg New Energy Finance, which I'm sure all of you will know, the world's leading provider of information and research on clean energy and transport. He's also a visiting professor at Imperial College in London, a member of the UK Department for International Trade's Capital Investment Advisory Board, and most recently he joined Sustainable Development Capital LLP as a senior advisor. He's also been a long-standing board member of Transport for London, which looks after the transportation in London, of course, and he's a member of the high-level group for the UN's Sustainable Energy for All initiative, which we'll hear more about later. He serves on probably too many advisory boards to run through, a nice long list, but he's importantly a prolific speaker and writer, angel investor in the tech and clean tech area, and does a lot of philanthropic work, which we don't need to go into here, but definitely worth checking out his bio to see that. Lastly, but not least, he was an Olympic skier. It's all an incredible kind of background, and we look forward to Michael as introductory keynote. Michael, if I could welcome you to the stage. Thank you very much.
Hugh, thank you very, very much. I didn't win the Olympics. I was on the British team. You also missed a key piece of my bio, perhaps justifiably, maybe we didn't remind you, but I'm actually a long-standing member of the advisory group for the Centre on Green Finance and Investment. I think I'm a founding advisory board member and very proud to be so, given the amount of excellent work that's been done here by Angel Gurria's team, as he described. So what I could try to do today, we face an enormous challenge. We face an absolutely enormous challenge, there's no question. And I'll try and characterize what does that look like, where have we got to, what do we still need to do, and give you maybe a couple of tools that could do what Angel Gurria talked about. We're all convinced, right? You're all here, so you don't need convincing, but others do. We need to give them the backbone. We need to give them the narratives and help others, be they policymakers, be they investors, be they corporates, be they mayors of cities, whoever, how to think about the challenge and how to make them feel that sense of urgency, which is, as Mr. Gurria said, missing. So where are we? Well, we've come a long way. I've been doing this for 14 years. We now see large-scale clean solutions, large-scale, not alternative, but large-scale, growing at double-digit rates. And they have been for some time, and they look like they're going to continue. In terms of investment, since we're talking about finance here, we've seen over $3 trillion invested in the last 14 years just in the energy side of the climate action agenda. About $350 billion every year going into solutions like renewable energy, energy efficiency, carbon capture and storage to the extent it's happening, power storage, smart grid, and so on. It's about $1 or €1 out of every 6 that is spent in energy. 2 trillion a year on energy, all told, 350 billion on clean energy infrastructure. Green bonds have come from nowhere to around $200 billion of issuance, from nowhere. So a meaningful financial instrument. And we've seen mainstream investors, I don't know exactly who's in the audience, but we've got mainstream investors, pension funds, insurance companies, asset managers, sovereigns, that are now not necessarily flocking to the sector, but they're certainly in the sector, their presence is there. It's seen now as part of mainstream financial activities. You'll see names, the Goldman Sachs's, the Morgan Stanley's, the JP Morgan's, are all in this space as advisors, and that's very positive. In terms of the costs, when I started this, the costs of wind and solar were 30, 40, 50 cents per kilowatt hour. We're talking about coal and gas at 7, 8, 9, 10 cents, and these solutions were 3, 4, 5 times as expensive. The cheapest source of electricity, new build electricity generating capacity anywhere in the world, ever in the history of the planet, from any technology, is actually now a wind farm currently being built in Mexico. Less than 2 US cents per kilowatt hour, unsubsidized. Solar, also around 2 cents per kilowatt hour, unsubsidized. Even something like offshore wind, even recently, cost 10, 12, 15, 20 cents per kilowatt hour, now 5 cents unsubsidized. So incredible progress on costs. The contribution to the power mix, we now see major economies, UK, Germany, Spain, Denmark, with over 30%, in some cases over 40 or even 50% of renewable electricity, and not just hydro anymore, but modern renewables, wind, solar, electricity in their power mix. It's got to the point, this is not alternative, this is not a few percent. These are penetrations of clean energy at levels that 14 years ago I was regularly told were completely impossible from an engineering perspective. It's not just European countries. Texas, more than 15% of the electricity in Texas comes from wind. Unthinkable 14 years ago when I started. As we speak, second half of 2018, somewhere between 7 and 8% of all electricity in the world comes from wind and solar. Right? 7 to 8%, nothing alternative, very substantial, and very strong momentum to continue it. And it's not just energy. Batteries now coming down very rapidly in costs. 80% drop in the last 5 years. We're going to see another, probably in the last 6 or 7 years, 80% drop. We'll see another drop of a similar order of magnitude between now and 2030. Electric vehicles are about to become cost competitive on a total cost basis for most use cases. By 2025, they'll be cheaper on a sticker price basis. 400,000 buses in the world that are electric, most of them in China, have already eliminated just under 0.5% of global oil demand. There's nothing trivial about that. Public awareness of air pollution is in a completely different place to where it was when I started this. There's 300 models of electric vehicles being launched between now and 2020. And where are we going? I describe it as a sort of shorthand as the 3/3 world, right? That doesn't mean, because of that great progress, we're going to 100% renewable electricity and 100% electric vehicles. So the 3/3 world that we're going to in 2040, this is where we are absolutely headed on current trends. This is not shouldn't be a controversial thing to say. 1/3 of our electricity will be wind and solar. It means about over half of it should be zero carbon if you include nuclear and hydro. 1/3 of vehicles will be electric. And we're not just talking cars and buses. We're talking delivery vehicles, we're talking short distance ships, we're talking even some short haul aviation by 2040. And the world will be 1/3 more energy efficient. The global economy should have grown by more than 100%, should be double the size, but final energy demand, the energy needed to run that economy, should only go up by, let's say, around half. So we should be more than 1/3 more energy efficient. And that's a continuation of some existing trends, maybe a slight acceleration, but the 3/3 world is enormously further than we thought we would get when I started doing this, and great cause for celebration. We're also going to a digital world, fully digital, which is the secret weapon as we think about how do we move forward, how do we accelerate. Ubiquitous chips and sensors everywhere, communications everywhere, processing, whether it's in the device or whether it's in the cloud, AI and machine learning, transactions, ubiquitous. The blockchain, forget the terminology, it means that every object can not just talk to every other object, it can actually do deals, it can allocate its resources, it can demand resources, it can trade. And that's going to make our use of infrastructure enormously more efficient. So it's a very positive picture. We've done fabulously. Three-third world is far beyond what most of us, I think, would have predicted, and it's going to get potentially very interesting because of digitization and innovation. The problem is it's far from good enough. It's far from good enough. The emissions have been flat for a few years. Now they've started to increase by a few percent. Broadly speaking, we're going to see we've flattened emissions. Flattened. But we know that Paris requires the elimination of emissions by 2050, at the very earliest, by 2100 at the very latest. The recent IPCC 1.5 degrees paper said that we have to reduce emissions by 45% by 2030 to have a 50-50 chance of 1.5 degrees. So flattening, congratulations, well done. Good work, financial system, you've deployed some resources. Absolutely not good enough. We need to go far, far further. Now, what does that mean? We've got to get in electricity and vehicles beyond the 1/3. Right? We've got to go beyond 1/3 clean of wind and solar electricity, beyond the 50% if you include nuclear and hydro. We've got to get far beyond that. But the big problem is that electricity is only 20% of energy use. On the current trends, we could end up in probably 2070, let's say, having fully decarbonized electricity. But if electricity remains only a minority of our energy use, and the current trends, electricity penetrating our energy use will take 300 or 400 years at the current rates. So we can't just focus on the things that work. We've got to get into heat. Heat is difficult. We've got to get into heat. We've got to get into heavy and long distance transportation and have solutions for those difficult sectors. Manufacturing, chemicals, petrochemicals, raw materials like cement and steel. We can't just focus on the wonderful successes in wind, solar, and electric vehicles. We've got to push on. And at the same time, we have to provide access. 1 billion people, the lowest number since the invention of electricity, but 1 billion people still don't have electricity. They're effectively excluded from the modern economy. 2 billion people don't have clean cooking. So we've got to push on whilst solving the energy access problem as well. And we will not be able to do it without disrupting the brown. When we say we're at a critical point, we're always at a critical point. Hugh's already said that. Here's the critical point, though. We can't just add on a green economy to a brown economy and call it success. We're at the point now where if we want to talk about generating a pipeline of low-carbon projects, the question is not, is there a pipeline? The question is, are we choking off the pipeline of brown projects, either by making them uneconomic, or by denying them capital, or by regulating, or by putting a big, fat price on carbon? But if you have a project pipeline of clean alongside a project pipeline of dirty, you're not winning. Now, one of the tools that I would maybe try to leave you with is an idea of a sort of 7-year cycle. It sounds very biblical, 7-year cycles. And I've been doing this for 14 years, as I say, and very clearly there have been two cycles in that period. The first cycle, sort of 2004 to 2011, all of this stuff, all of the clean energy solutions, very expensive, finance was experimental, policy was somewhat experimental as well. A lot of the investors were investing for social reasons. They were accepting lower returns. The climate framework that was favored in that period was very top-down. If you remember Copenhagen, it was all about top-down divisions of carbon budgets. We were going to have one negotiation, 50 years of implementation. And that was the sort of first phase. Cycle 2, which started in 2011, is all about the costs of the solutions plummeting, the volumes going mainstream, the disruption beginning. Zero marginal cost wind and solar is very disruptive to price formation in electricity markets. But we've seen proven financial instruments. And they've not forced out the brown, but we now know how to do this stuff. Blended finance. How many of you have worked on blended finance? Right? We know how to do this stuff now. We see mainstream financial players, those pension funds, those asset managers are around the table now. And we see pluricentric decision-making, a much more mature view. Cities, regions, communities, companies, individuals, everybody is around the table at a very different phase we're in. In individual markets, there are people who say, oh, this transition's so slow, we'll never manage it. Individual markets can go from 1 or 2% clean solutions to 40 or 50% in one 7-year cycle. We know that now. We've seen it. UK coal, 42% of electricity to 2% in 6 years, 2012 to 2018. LEDs, now 40% of light bulbs. Electric vehicles in Norway, 0 to 50% in 7 years. Right? US unconventional gas, effectively almost 0% penetration to a half in about 7 years. So individual markets and sectors can flip dramatically in these 7-year cycles. So think about those 7-year cycles. Don't say, oh, we're at the beginning of this terrible marathon. So you've got 7 years per market, per segment, and 7 years to establish a new reality. Now, the downside is we've only got 2 more cycles. You've only got 14 or 15 more years really to solve these problems. Right? There'll be implementation after that, but we have to be in a place in 14 or 15 years where the economy looks pretty fundamentally different. If we keep emitting at this rate, we will have 0 carbon budget. Right now, we've got about 600 gigatons carbon budget. 14 years more at this rate, it'll be 0. Right, so you've got 2 more cycles until we have 0 carbon budget, unless we make significant progress. And I said I'd try and give you a tool for the people you meet to put some backbone in them, to persuade them that they can't just wait 14 years and then deal with it. And as I go around the world, I talk to investors, I talk to oil companies, I talk to corporates, I talk to policymakers. The question I ask them is, think about that point in 14 or 15 years when we may have no carbon budget. And the question is, what do you want your portfolio to look like then? Right? If you're an investor, you're an asset manager, what do you want to be sitting on in your portfolio when the carbon budget is 0, when the climate signal is so clear that there is no controversy? What assets do you want to be owning then? And what do you want to do today to start moving in that direction? And you can ask that of a city. What infrastructure do you want then? You can ask it of an investor. What portfolio do you want then? You can ask it of a corporate. What assets, what businesses do you want to be in then? And what do you want to do today to start to get there? And I find you get in a good discussion. So, we have 2 more 7-year cycles left. Let's not waste them. Thank you.